Stocks are coming off their worst week of 2023. Here with the check on the pulse of the retail investor, J.J. Kinahan, CEO of IG North America. J.J., I'm looking at the cover of the Wall Street Journal. And the point is, it says the headline, investors are getting ready for a jump in market volatility. And I guess to put some meat on that, VIX calls on volatility rising. More of those calls changed hands in February than any month since March of 2020, which makes people think, you know, where the VIX is right now, if you're buying calls, you think there's going to be a sharp increase in volatility, and volatility usually means a downward move. Have you noticed this happening?
Yes, Joe, we have seen a bit more VIX being purchased. And I think part of it being people just aren't sure what to do. So it's a little bit of protection without necessarily having to get out of positions that they currently have. And again, you know, the Fed has been such a crapshoot. I hate to use that word for the last few weeks. You know, we all love the news the one day. We all hate the news the next day. I think you're seeing two trends emerge because of that. Number one, as you just mentioned, VIX call buying. Number two, the 0 date till expiration options that people are purchasing. Again, two of those two things primarily are due to uncertainty. You're still seeing people investing more longer term, but you know, they're using those two things very, very much. And then the other thing is, like last week, we saw a real lack of buying in the names that are traditionally really popular with the retail, such as Microsoft, Apple, Tesla particularly. In fact, Tesla trading in general last week was down 30% compared to the week before. People didn't actually start buying some until the last hour or so of Friday afternoon. So it's been very interesting how the retail trader has reacted to this and looked for different opportunities in a little bit of this confusion.
I think crapshoot's okay, JJ. That's an actual, I mean, it's a Las Vegas game. It's craps. I don't think you need to.
It's actually the most fun Las Vegas game, I think,
but
Joe.
It's not a toilet term when you use it that way, so you just relax there, big fella. That's fine. Don't
I appreciate that, Joseph.
Quite so worried about that. And it's cable anyway. There were a lot of other things that you're saying people want to stay long, which means I guess they just want to ride out this period but have some protection. There were a lot of other things last week, though, in terms of underpinnings and technicals that didn't look great. Do you still think we're in do you have any evidence that says we're still in an uptrend, JJ? Because a lot of it is
we
bad.
held the 200-day moving average on the S&P 500,
okay,
SPX, and so I think that's a really big thing to build on overall. And the fact is, Joe, yes, the numbers have been worse in terms of pointing towards a recession, you know, vis-a-vis some of the retail sales, et cetera. But what we are seeing is that it's not a full out. This is definitely terrible time, et cetera. Again, you know, you talk about it all the time on the show. Historically, we still have lower rates. Yes, we're seeing a bit of a slowdown, which does make sense, particularly in a housing market. But overall, things aren't terrible. My biggest concern, Joe, is when, you know, we've had these layoffs over the last few months, particularly in the technology sector. My biggest concern is that as some of these severance packages start to run out and we hit the summer, that it's going to be very, very difficult on the economy overall, because, as you know, we've seen in the beginning, those people were getting jobs right away. Now, according to what I read last week, only about 45% of those people are getting jobs within 3 months. At some point, that is going to catch up to the economy.
Okay.